Okay, let's get on to data released over the European session.
Okay, so the first thing, obviously, we couldn't ignore, we've already mentioned it, but China devalued the yuan by a further 1.6%, or at least it adjusted its reference rates for the yuan against the dollar. It was the second move this week. That's 3.5% that they've effectively devalued their currency by. At the same time, we saw some industrial production numbers from China. This is for the month of July, the year-on-year change. 6%, hardly something to be upset about, until he realised that that was 10% below the forecasts of 6.6% and even more below the prior read of 6.8%. So perhaps those two items are interlinked.
When you also get the feeling that the Chinese, our friends in Beijing, are aware that the data coming up in the near term may be rather soft, and hence made the move in a preemptive way.
Yeah, that's quite possible. They know a lot about trying to plan an economy, don't they? They've done it for years, so maybe they're still trying to practice those dark arts. Back into Europe and to the UK, we had average earnings data this morning for the 3 months to June. Important, obviously, because the Bank of England is looking for signs of inflation as a potential catalyst to raise interest rates. I've gone here for the figure including bonuses. Came in at plus 2.4%. Well short of the forecast of plus 2.8%, and indeed the prior read of plus 3.2%. What struck me as odd though here is that if you look at the figure without bonuses, it's actually a higher number. How that works, I've no idea, but that came in at 2.8%.
They're trying to copy the Chinese way of doing data, but I don't actually know what a bonus is. Maybe you can tell me what a bonus is. What is that?
It's a dim and distant memory, I think, is what that is.
Right, okay.
And also of importance as far as the UK economy is concerned, and interest rates, the UK unemployment data for the 3 months for June, here we're looking at the outright rate of unemployment, came in at 5.6%, bang in line with the forecast of 5.6% and the prior read of 5.6%. So no better, no worse than we were the last time we had this data, but that probably isn't a cue for the Bank of England to spring into action either. It's flatlining at the moment, which is great, but it's not. In fact, it's not getting any worse, but it certainly isn't getting any better, and doesn't probably force Mark Carney's hand. And then back into Europe and into the Eurozone for the industrial production numbers for June. Again, a year-on-year figure. They came in at a very disappointing plus 1.2%, much lower than the forecast of plus 1.5% and the prior read of plus 1.6%. So the QE isn't working its magic here either. And so, that one of the key tenets of the ECB's policy is to try and stimulate not only the export market but the domestic internal, if you will, European and Eurozone markets, and that doesn't appear to be happening, at least not with any great fervour.